lesson for today, we're going to study the factors responsible for the rapid development of financial institutions and markets in Kenya. In the recent past, there has been a rapid development in the financial market as well as the financial institutions that has been evidenced by the large number of transactions at the financial market, that is the securities exchange. Today, we are going to look into the factors responsible for this development. The first one is the deregulation of financial institutions and market. Number one, deregulation. For example, in the recent past, the government phased out interest rate ceilings. There has also been the easing of portfolio restrictions on pension funds and insurance companies. We've also seen the removal of a variety of restrictions on the permissible activities of banks that have facilitated large amounts or large transfers of money, both within the borders and across the border. So all that has led to rapid development in the financial market. We can also cite the lowering of institutional barriers that was intended to allow firms and individuals to adjust their claims, to adjust their liabilities with greater ease in order to improve the liquidity of their portfolios and diversify. And also we can talk about the process of integration that also intensified, which also led to the increase or the activities related to foreign investors. And financial institutions have also allowed relatively been allowed to freely enter the domestic market. And that is also true when you consider different parts of the world. So deregulation has led to the rapid development of financial institutions and market. The second factor is technology. Technological innovation. Technological innovation. Now, technology is another force that has changed the operation and the structure of not just the national financial market, but the international financial system. We've seen information and telecommunication technologies that have greatly increased the speed with which information is processed, speed with which information is disseminated. And around the world, market participants have all the information that they require within a very short time. And here in Kenya, we've seen the use of the automated trading system software, which has allowed real-time analysis and the interaction with the global financial markets. And that happens at every hour of the day, leading to capital inflows, leading to investments, and so on. So we also witnessed large volume of transactions as a result of the automated trading system. So technological innovation is a major factor that has contributed to the rapid development of the financial market. Number 3, competition. and this is competition among the financial institutions. Competition is always good because of the quality of services that are offered. When you have a market that has many players, the very fact of competing, that improves the services that are offered, improves the products that are offered, it lowers the cost of transaction, and with that you have the improvement or the growth of the financial institutions. The ease of capital controls, the liberation of financial markets, the technological innovations have stimulated competition among financial and the non-financial institutions in various countries. And that in turn has further transformed the structure of not only the national financial market, but the global financial market. So that's a factor. Competition among the financial institutions. The fourth factor that has contributed to the rapid development of financial institutions and market is the stable macroeconomic environment. Macro. The general economic environment has led to rapid development of the financial institutions and market, because these institutions operate in an economic environment. So there has been stable macroeconomic environment in Kenya, with the government coming up with the different economic policies which stimulate economic growth. These policies have led to individuals saving and investing in stocks, investing in shares, and thereby leading to the rapid development of financial markets and financial institutions. When the economy does well, when there are many jobs in the economy, when there is many people engaging in economic activities, production of many goods, production of services at a lower price, many citizens are employed, companies grow, people have enough money to consume, people have money to save, and when they save, this money is saved in fixed deposit accounts. This money is reinvested in stocks. This money is invested in bonds, and that leads to development of financial institutions and markets. So having a stable macroeconomic environment is a factor that has been responsible for the rapid development of the financial markets. Number 5 is the increased awareness as regards to saving habits among Kenyans. Awareness. Increased awareness. People are now made aware the value for saving. People have now been educated that you cannot be rich, you cannot be wealthy, you cannot improve the quality of your life unless you save, then invest, then you have your investment giving you return, which improves your standard of living. There has been that increased awareness in Kenya. But previously, people didn't know the relationship between saving and the quality or standard of life. We have heard many people now being pragmatic, other than previously when we had many citizens wishing or hoping for luck or praying for a good or a standard of living, rather than just praying that you will one day be rich. People are now aware for you to get there, you need to work, you need to save, then invest. When individuals save, where do they save the money? Money is saved in financial institutions. When that money is saved with financial institutions, the deposits, the financial institutions reinvest the money, and that's how the financial market has grown in the recent past. Increased awareness in regard to saving. We also need to give credit to the government. Government policies. Government policies. The government through policies, through development of policies that are conducive to stable markets, international markets, the government has come up with policies that favor the development of a robust private sector. All right? When the private sector grows, then that inevitably leads to growth in the financial institutions and market. And the government has a major role to play in regard to providing a conducive environment in which the private sector can thrive. That has led to the rapid development of the financial institutions and markets in Kenya. We can also cite factors like the development of SACCOs. We've seen cooperative movement in Kenya on the increase in the recent past. And that movement, the cooperative movement, has been responsible for the fast growth of financial institutions. These are SACCOs, the microfinance institutions, the commercial banks, and so on. The development of cooperative movement. Cooperative movement. Today we have many SACCOs in Kenya. What do these SACCOs do? These SACCOs help individuals to save money. They lend money back to the individuals, and we have the positive effect on financial institutions, the micro financial institutions, and so on. So these are some of the factors. These are not the only factors, but are some of the key factors responsible for the rapid development of financial institutions in Kenya. We can cite high credit rating among the foreign lenders. That has led to capital inflows and investment. All right? Where our financial institutions are highly rated. Credit rating. Then that also contributes to the growth of the financial institutions and markets. So these are 7 factors responsible for rapid development of financial institutions. Deregulation, technological innovation, competition among financial institutions, stable macroeconomic environment, increased awareness in regard to saving, government policies, cooperative movement.